How's it going, everybody? My name is Dan Oman, and today I'm going to be showing you guys my futures trading strategy and how I managed to close every single trade in the green. And this is basically a revolutionary system. And, basically at this point, I am interested in giving back the knowledge and experience I have acquired and, really helping others succeed at their ambitions of trading. So without further ado, let's get started. And of course, any good futures trading strategy is going to start with a watch list. So I kind of will just run through what futures contracts I'm looking at right now, what products I keep on my watch list, and we'll go from there. We'll find one that is a good candidate to watch and perhaps jump into a position as well. So here's /ES, the S&P Mini. Here's /CL, the crude oil. And this one has really been a hype and great stock, as you can see over the past few days because of the terrorist attack on Saudi Arabia, causing oil prices to jump up, and it's really been very good for me the past few days. As you can see, I've already made $1,000 today off of it, and it looks like it is trading down at the moment. It's nearing the 50 points, so I'm going to stay away from that for right now. Wait until it gets either below 30 or back up above 70 on the RSI. So while I think of it, I might as well start going through some of the indicators that allow me to ensure that I pick the perfect entry point and exit point on every trade every time. So of course you've got the RSI, Relative Strength Index, and this is my main primary point of reference for whether a stock is either overbought or oversold. It's really helpful in indicating, or assessing how many sellers there are still in the mix and how many buyers there are still in the mix. Essentially, if it's below 30, that suggests that there are no more sellers in the order flow. And the same goes for if it's over 70, there are generally no more buyers in the order flow. So I do use TD Ameritrade Thinkorswim, as well as the Active Trader Direct Order Monitoring System. This allows me to see in real time, how many people are looking to buy and looking to sell. I wouldn't suggest using this as an exact point of reference. Of course, you need to combine all of these indicators along with your own judgment and experience in order to achieve the results that I achieve. So back onto the indicators, you have the stochastics, and this is actually a custom-built combination of different stochastic measures. It's got the stochastic slow, which is indicated in the blue and yellow charts. Now these two charts, or these two lines rather, are both set to different periods, so they have different sensitivity to price movement and volume, and they have different weighted measures. So the yellow, oh, sorry, I screwed that up. So the purple and the blue are the stochastic slow. Now the purple one is set to, I believe, 14/50 periods, and the blue one is set to 10/2 periods, or 2/10 rather. And so that kind of, makes the purple one only sensitive to long-term trends and, real heavy price movements. So it'll only really reach up above 70 if it's so insanely overbought that, all other metrics are off the charts. And it just kind of gives me a more longer-term view on how things are going. As for the blue one that's set over 14 periods, it's the general traditional stochastic slow setting. As for the yellow, that's the stochastic RSI. It combines the stochastic mathematical formulas along with the relative strength formulas, and that is a 14/5 period setting. So since the stochastics is a different mathematical formula, that makes sense. And so basically, you can go in and you can set that yourself, and I just thought those numbers were relevant because you won't get the same results if you just use the stock settings and combine these on your own. So the next is the double smooth stochastic along with the Elliott oscillator. I don't know why that was so hard to say, but yeah, so this kind of gives you a more smooth or kind of averaged view. So smoothing is basically the degree to which a statistical sample is averaged out so that the outliers are not factored into the overall equation or moving average, as you can see here. The stochastic also shows similar metrics and is used to combine and compare against the other indicators that I have mentioned. The LBR is for all intents and purposes, a combination of all involved, along with the Smart ADX, which I'll get to after that. But the LBR kind of gives you a good visual showing, both exponential and parabolic price movements and averages, simple moving average, and then it also has certain RSI features and stuff like that. But that really uses more of a parabolic swing and oscillation reversal type of mathematics. So that one is also custom built. I won't get into the details on that. It's rather complicated, but if anyone is interested in learning more about that, I'm happy to help. So as for the LBR Smart ADX, that is an average directional index, and that functions differently from these other indicators in that it kind of shows how much pressure is being built up on one end of a price action momentum. So essentially, it will move up closer to 40. It will move up more into this green area when the pressure is building up. When something kind of has a long run up, eventually the selling pressure builds and overcomes the buying pressure and pushes it back down, causing a reversal or a consolidation in a stock price. So this kind of is a measure of buying pressure or selling pressure or any pressure against the current trending direction of a stock price or a futures price, of course. So those are the primary indicators that I use. In addition to that, I also have a VWAP set, which you can see here as the yellow, purple, and pink lines here. The VWAP essentially gives you an outward view of what the stock is currently trending at. If it is trading above the purple here, and it is showing a support point at this purple line, that means that it is trending upward, and you can expect a general momentum to the upside. On the other end, if it's trading below the purple line and that's acting as a resistance point, that means it's trending downward. And this is really helpful for, I've noticed, sometimes with futures, depending on the day and what time frame you're looking at, it's really helpful with general equity stocks and ETFs and stuff. And it really helps you look at a further out time frame, even not too far, because it'll start looking like this. But if you just kind of pan out on the 1 day or 5 day, it really shows you the momentum. And also it's helpful if it does, kind of dip below the yellow line or dip above the pink line, you can generally buy or sell with relative confidence that it is either oversold or overbought. And of course, that should be taken into account all the other things held constant in the other indicators. So with that having been said, and of course, with any questions, please do not hesitate to comment below. And of course, subscribe. I will be posting a lot more stuff in the coming days. Also, I will be doing live streams. Additionally, I have a Facebook group, Trade Alpha, in which I have been posting my daily profits and the results of all of my trades, so that anyone that wants to do some due diligence and really check up on me and see if I'm the real deal, check out Trade Alpha. I post all the results and all of my P&L statements on that Facebook group. Additionally, I have a Instagram, so please give me a follow on Instagram. It's at Dan Oman, DANOMUN. I'll show you a little caption there, plus you can see all of the links in the description below. And my trading group page for Instagram is just trade.alpha. So yeah, that's two different Instagrams. So, yeah, as I said before, let's jump into a trade and I'll show you my process and overall strategy for jumping in and out of positions and how I managed to do that without losing money, basically ever. I certainly don't ever have a red day. I haven't in over 6 months, but sometimes I'll lose a little bit on a trade, but when I do, I'm only losing the amount of money that I already had accounted for. So if I go up a ton on the day, I usually set a profit target, and then anywhere above that profit target, I will risk that capital on any higher leverage or higher risk trades, just for fun. Because sometimes they pay off really well, sometimes they don't, but either way, I always make sure that I close out the day in the green and meet my profit target. Anywhere above that, I'm willing to risk that, with higher leverage. So, all right, let's see what we got here. /NG, which is natural gas. It's a great one, but it's generally relatively low volume. Oh, and I forgot to mention, volume is a really, really important factor for consideration. If it's low volume, especially when it comes to futures contracts, which are, I should say, and really emphasize this, they are extremely, extremely sensitive to price action. They are leveraged 10x. So, they trade similar to what options do in that you can expose yourself to substantially higher risk when you enter into a futures position. So you're going to want to make sure that the direction and your assumed outcome is confirmed. You wait for that reversal confirmation and be patient and obviously diligent at all times when you're trading futures, because they're highly liquid. They trade and move really fast, which can be a benefit and potentially a downside if you don't know what you're doing. So in comparison to options aren't generally as liquid. It's hard or almost impossible to set stop losses on options. You can do that all day with futures, and that's why I prefer them over options trading. You cannot actually, pick and choose the degree of leverage that you want to expose yourself to with futures generally. There is some difference between contracts. Some are, 10x, some are more, some are less. But generally, you can't just go in where you can with options and choose how much leverage and time frame and stuff like that. You can pick different futures that expire at different times, but I'm not sure if the theta is any different on that. There's certainly no degradation or anything like that for holding it long term. But with me, I understand and know day trading, so I've never generally into a position more than 24 hours. I would say mostly I'm never in more than 1 hour. I generally get in and get out. Sometimes I'll do a scalping technique every once in a while, depending on what the charts are telling me. I will get in it to an overnight position. Of course, futures are traded 23 hours a day, 5 days a week, 6 days a week, actually. And so I can always monitor that and get in and out at any time. So with that also being said, let's go back into trying to find something to buy. RTY, which is the Russell 2000 index contract, is looking pretty good. So let's take a closer look. So it looks here like it's getting ready to potentially move up. If it does, it'll be just a tiny bit. So I will display the scalping technique that I use. So I always buy a few ticks or a few levels below where it's currently trading at. I never just jump right in. I always try to get a lower cost basis. And that also goes for, and I usually trade 2 contracts at a time. And then in at my first position, like I just did here, I'll always trade, 1 or 2 ticks below that first buy-in position, because basically what I'm always trying to do is average down my cost basis. I never want to buy above it. And also, I really want to emphasize the fact that you should never, ever try to average down when something is not going your way. So when something seems to be, changing directions and it's just your trade is not working out well, never try to buy down and lower your average. Because generally, if you're chasing something down the drain, that's just not a good strategy to take, especially with futures, because they tend to really get going with their momentum, and sometimes they can really just kind of shoot past all expectations on overbought or oversold levels. So if it's not going your way, set your stop loss, and that's another really important point that I want to kind of set as a standard for my personal trading, and it should be also for yours. So always set a stop loss. In this case, I'm really liking the way it's moving, so I'm going to set a stop loss like just a few ticks below. And then I will probably jump out. I'm pretty happy with the way this is going. I'll jump out and then buy back in. So that's scalping. Basically, you just take a few, just a few small movements. You jump in, jump out, jump in, jump out a bunch of different times, and it really adds up fast. And there you have it, $170 in, what was that, 2 minutes? So I'll just keep doing that. I may increase my position size a little bit next time. Also, when I'm scalping, sometimes when it's really high volume and, moving a lot, I'll, do that, but I'll also sell an extra 2 on top of that sell order so that I can get the margin when it's going down as well. So I'll just kind of go back and forth as it's going up and down and kind of just squeeze out as much profit as I can from there. So that's another good technique. So essentially what you want to do is just wait for the RSI to be way down there. Make sure that you set your stop losses always. Sometimes I even set stop losses before I even enter into a position, because it's just so important that you cover your ass with this. It's vital, because like I said before, futures are highly liquid. They move really fast and unexpectedly. and even the smallest of price movements, as you can see here, that could have easily been minus 170. So just make sure you cover yourself. Always, account for, the unexpected. And yeah, I really hope this was beneficial to you guys today, and guys and gals rather. And I really hope that you comment below and subscribe. Please subscribe. I'm very new to this channel, but I have a lot more insights and beneficial, videos coming in the days ahead. And I'm really looking forward to helping people become successful and, really just trade alpha and just really just surpass all expectations in their ambitions to trade in the stock market, in the futures market. It's once you learn this, it really is just such an amazing living, and I feel so blessed to have figured out a way to really beat the market. And I'm hoping to give back on that. So, with that having been said, take care, everyone, and let's get this money.